Something really big is happening in the financial markets, but it's happening quietly. We're seeing some of the richest, most successful investors on the entire planet methodically selling off their stocks. And we're not talking small amounts here. We're talking historic volumes. This isn't just a signal about some potential market correction. No, this could be pointing to the largest wealth transfer in all of human history.
So that really brings us to the core question we're tackling today. Why now? Why are the people who literally built these companies, the insiders with the absolute best information, all heading for the exits at the same time? It really feels like their actions are screaming that they see something on the horizon that the average investor just doesn't.
And they are being so quiet about it. There are no big announcements, no primetime interviews where they explain their strategy. It's this quiet, almost coordinated exodus that you can only see if you dig through mandatory SEC filings. While the mainstream message is always, stay invested, buy the dip. The ultra-wealthy, well, they're doing the exact opposite.
And here's what that looks like in stark reality. The numbers are just staggering. For every single dollar that corporate insiders have been spending buying their own company stock, they've been selling $20 worth. Just look at that difference. Let that sink in for a second. The people who know these companies inside and out are selling 20 times more than they're buying. That is definitely not a vote of confidence.
So, who exactly is leading this charge? Let's take a look at some of the biggest names in the game. And believe me, these aren't just random executives. We're talking about the titans of industry.
And we have to start with the ultimate market signal himself, Warren Buffett. The man is 94 years old. He's seen pretty much every market cycle you can imagine. So when Buffett makes a move of this size, you can bet the entire world pays attention. And right now, his actions are screaming caution.
The numbers here are just wow. In the last 2 years, Berkshire Hathaway has dumped over $234 billion in stocks. This massive selling spree has pushed his pile of cash and short-term government debt, things like T-bills, to a record-breaking $325 billion. And look at what he's selling. These are his favorites. He sold off 2/3 of his massive Apple position and over 1/3 of his stake in Bank of America. Buffett has always said he only sells when a stock is overvalued or when he has a better place for the cash. Right now, he's not buying anything big. And that tells you pretty much everything you need to know. He thinks the market is way too expensive.
Next up, the man who built the everything store, Jeff Bezos. And he's not just diversifying a little bit here and there. No, he is liquidating a huge chunk of his Amazon holdings with some incredibly strategic timing.
So over the last 2 years, Bezos has sold $14.2 billion worth of Amazon stock. Now, his team says it's for tax planning and philanthropy, but here's the real kicker. Right before he started these massive sales, he moved from Washington State to Florida. So why does that matter? Well, Florida has no state income or capital gains tax. This one move probably saved him close to $1 billion in taxes. This was a highly calculated exit. Ask yourself, would you sell that much stock and go to all that trouble to avoid taxes on the sale if you thought the price was about to go even higher?
And you guessed it, the pattern continues with the architect of the world's largest social network, Mark Zuckerberg. He's also been an incredibly prolific seller of his own company's stock, Meta. In just the last 2 years, Zuckerberg has cashed out nearly $3 billion in Meta shares. Now, a lot of this is done through what's called a pre-planned trading program. It lets insiders schedule their sales in advance so they don't get accused of insider trading. But here's the thing. He's the one who chooses when to set up the plan, how much to sell, and the timing. And he chose to sell billions right after Meta's stock shot up over 500% from its lows back in 2022. He is absolutely selling into the AI hype, converting those paper gains into cold, hard cash.
So we've seen the big three, Buffett, Bezos, and Zuckerberg. But this story is so much bigger than just 3 billionaires. Let's zoom out a bit and see how this is really a market-wide phenomenon. Yeah, this isn't just about a few founders taking some chips off the table. The data's clear. This is a widespread trend across the entire landscape of corporate America. The people with the deepest inside knowledge are selling, and they are selling in droves.
Just take a look at this list. You've got Jamie Dimon, the CEO of JP Morgan, making his first stock sale in 17 years. Think about that. He held through the 2008 crisis, but he's selling now. Executives at NVIDIA, the darling of the AI boom, are consistently cashing out millions as the stock soars. And we're seeing the exact same pattern from insiders at Tesla, Google, Apple, Microsoft, you name it. The selling is broad, it's deep, and it's happening across all the major companies that lead the market.
This quote really puts it all into perspective. It's not about what they're saying on the earnings calls or in interviews. It's about what they're doing with their own money. And right now, their actions are sending a crystal clear, unambiguous signal.
Okay, so this brings us back to the most important question. Why? Why is this mass exodus happening right now? Well, the sources we've looked at point to a convergence of 5 critical factors that are basically flashing giant warning signs for the ultra-wealthy.
All right, let's break these down. First up, extreme valuations. Key market indicators are at levels we haven't seen since right before the dot-com bust and the 2008 crash. The smart money sees that the air is getting really, really thin up here. Second, the AI hype might be peaking. Insiders at these tech giants are doing the classic sell the news, cashing out while the story is hot before reality has a chance to set in. Third, the economic data is starting to show some cracks. From rising consumer debt to a softening job market, the signs of a slowdown are getting harder and harder to ignore. Fourth, geopolitical risks are just on the rise everywhere, and that kind of instability is never good for stock prices. And finally, and this one is a big one, looming tax law changes. Major tax cuts from 2017 are set to expire, which could cause capital gains taxes to jump significantly. So, they're selling now to lock in today's lower tax rates before that window slams shut.
Now, this massive insider selling isn't just a reaction to short-term market jitters. It actually connects to a much larger, once-in-a-generation demographic shift that is fundamentally reshaping the entire landscape of wealth. This is what's known as the Great Wealth Transfer. Over the next couple of decades, an estimated, get this, $84 trillion will pass from the baby boomer generation to their heirs, which are mostly millennials and Gen Z. It is, by far, the biggest handoff of assets in all of human history.
But here is the real catch. The argument is that this transfer is not happening equally. This slide just perfectly illustrates the 2 different playbooks. The wealthy are executing a strategic transfer. They sell their stocks at record highs, they convert that paper wealth into hard assets like cash and real estate, and then they plan to pass those protected assets on to their heirs after an inevitable market crash. Meanwhile, what's the middle class told to do? Stay invested in their 401ks, which means they will likely pass on assets that have been severely diminished by that very same crash.
So if they're selling stocks, where is all that money going? Well, they're not just stuffing cash under the mattress. The smart money is flowing into hard assets and safe havens. They're buying gold as a hedge against inflation and instability. They're putting money into specific types of commercial real estate and private equity, things that are less tied to the daily whims of the stock market. And of course, just like we saw with Buffett, they are holding record amounts of cash and treasury bills, earning a safe 5% while they wait for the opportunity to buy back in when there's blood in the streets.
Okay, so the smartest players are all positioned defensively. They're waiting for a downturn. So what does that mean for the market? Let's look at a few potential scenarios for how this could all play out.
The analysis really boils it down to 3 possibilities. There's a 20% chance of a soft landing where the market has a mild correction but we avoid a major crash. But the most likely outcome, with a 60% probability, is a hard reset, a significant market crash of 25 to 35% paired with a recession. This is the classic historical playbook. And finally, there's a 20% chance of a system break, which is a true financial crisis level event, and it's pretty clear the insiders are preparing for those 2 more severe scenarios.
So what does this all mean for you? Now, this is absolutely not financial advice, but the source suggests 4 key things to at least consider. First, take another look at your personal risk tolerance. Second, think about building a cash position to give you options and stability. Third, and this one is so crucial, pay attention to what the smart money does, not what the talking heads on TV say. And fourth, prepare yourself mentally for volatility now so you can avoid making emotional decisions like panic selling at the absolute bottom.
Ultimately, this whole thing really comes down to a final, pretty provocative question. The wealthy have made their move. They are protecting their wealth. They are selling. So the question for you is, will you protect yours, or will you be the one on the other side of their trade, buying what they are so eager to get rid of?